Welcome to Super Growth Stocks. This is Morris. In this video, we will be looking at the NASDAQ 100 plus some key growth stocks on how to invest in those stocks right now. The first chart is the triple Q. This is also a candlestick analysis video, and it's very important to understand where we're at in the overall greater market. We will take a look at that. Let's begin with where we are at the very moment on the NASDAQ 100. First of all, I wanted to go back to the previous bottom, all the way back here, Christmas Eve, and a massive morning star formation. That is a very bullish formation, and it birthed a very big move. What we are seeing now, and it's very important as well, it's also an evening star, so it's just the opposite. The black candlestick in the middle is also known as a hangman. The other issue that we've had since we had this top come into play, market rolling over, and just note here the 10-day moving average beginning to turn down. What we've also seen is a break below the 200-day moving average. Let's look at the next chart. This is the same index, the triple Q or the ETF. Notice the big inverse head and shoulder formation in construction. Now this is a chart in my videos we've been talking about. What is concerning here is the break of the 200-day moving average. The correction has just started, and we've already broken the 200-day moving average. The history of the 200-day moving average, well, you can see it in 2017, 2018. Market stays well above it. It's the magnetic field line. Market eventually comes back to it. But when it breaks, then it becomes that magnetic field that is a resistance, no longer able to get through it. We have managed to close above that field for quite some time, the 200-day moving average. But the concern is we're just now starting a correction, and already we have broken the 200-day moving average. We want to keep that in mind as we look at a couple other charts. Now let's look at PayPal. Very interesting. While the NASDAQ 100 is in correction, by the way, we are short the NASDAQ 100 following the proprietary model. And if you will note here, PayPal looks considerably better. Well, it should. This is one of the leading stocks, but you have to be careful with a stock, any of these growth stocks in a NASDAQ 100 correction. Make your buy here, put your stop loss under the most recent lows. If it breaks, you quickly sell the stock. If not, it rallies strongly higher. You're in the money. One other stock we want to look at is Facebook. Facebook, also a very same model. It has rallied strongly off of the early March lows, rallied strongly higher, but then has turned around and moved lower. A downtrend has been broken, and the way to buy the stock, follow a strict discipline model, put the stop loss under just under the recent lows, and if it trips that, you are good and out of the market. If not, your position continue to ride while you make money. Just be careful trading these stocks in a correction. That's what we're seeing now based on the proprietary model and the candlesticks combined. That's all for now. This is Morris saying thank you.